Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. All right, welcome everyone to the Week in Italian Startup, where Nicola and I, we dissect the latest news happening in the Italian ecosystem. Welcome back, Nick.
Ciao, Jack. Hello, everybody. Welcome back to the show.
So let's start with Serenis. All right, so Serenis extended the round announced in June, raising an additional 2.7 million from Angelini Ventures, Azimut, and Invictus Capital. So for people that don't know the deal, Serenis has been one of the most popular deals happening in the press, I would say, of this year. What is interesting is that, we've been talking about Serenis before. Basically, what they're trying to do is to digitize access to mental health. So essentially like therapy online through basically a platform. And what is very interesting is that the two founders are very well known in the ecosystem, and they are both repeat founders. And with this round, basically they are getting to about 6.5 million of fundraise. So that's it's very good news for them. Very good news for the company for sure.
Yep. And apparently investors love them because they expanded the original rounds and they accepted quite interesting investors, so big names, names that we often hear on our weekly podcast. Azimut, Invictus Capital, that's rare but still an active investor with international LPs, DIF and Cazoo and Prestiti, and Angelini Ventures, the new boy in town with 300 million under management, and there they are with the first, I believe the first investment they are announcing.
I'm not sure about it. I think they already placed some bets before, not maybe as Angelini Ventures, but as Angelini. So definitely branded, probably is one of the first for sure. So that's definitely like valuable to mention. So one element that kind of made me that came to my mind while reading about this deal is the eternal debate between first-time founder and repeat founders. So this is a great case in Italy where the funding team is serial repeat founders, and the question is always like whether which one VCs have a bias toward. Is it the repeat founders? Is it the first time? How is it gonna work? And this is a great example where two very successful founders kind of sticking together and really building something extremely fast and with a very nice growth rate and a very powerful marketing. So this is interesting. My thought on that is that if you are first time, you kind of need to compensate, in a certain way, because I believe there is actually a bias for repeat founders, because it's kind of it's a signal from the VC sort of mindset. It's like a little pattern that we maybe unwillingly we like to think about. And basically the antidote for that for first timer, from what I was thinking, is basically like getting showing that you get to product velocity extremely fast. So my point being, repeat founder is an advantage, but not necessarily like a drawback if you're a first time founder that actually, can show something extremely meaningful. So what is the internal thought process for you, Nick, in terms of repeat founder versus first time founders?
Well, I think that in particular at the seed stage, because this happens in particular at the seed stage where you don't have many data points on which to base your investment thesis. You're sitting down with a person with probably a PowerPoint and mock up some initial traction. And then you're mostly investing into the person. And if the person has been there before, they know which type of vibe to emit, what to say, how to say it. They have a much more clear idea of how to express what they're doing. that doesn't mean that they know what they're doing, but they know better to tell you what they're doing, or what you want to hear. So, is this one sitting in front of me, an entrepreneur? That means that maybe there is a bias not only in the selection, but in the in the rate of investment, just because it's clearer. I mean, you understand much better what they're doing, what they're building, where they want to go, and so on and so forth. Having said that, I don't have hard data about the actual outcome of investing in repeat founders versus first-time founders. I've got this feeling that there are a lot of great startups with repeat founders at the helm, but if you think of any great name out there, they're first-time founders. Apple, Google, Facebook.
Interesting.
That's interesting, right?
That's interesting.
Microsoft.
But
so there is something.
But wait, there was a phase when. But wait, at that time, failing was not cool. Now failing is cool. So people try more, and they become repeat founder like quickly. So I don't know if the paradigm is shift or not. But that's a great point, though. That's a great point, because everything we use as benchmark of a great entrepreneur is they're all first time. Good point. Excellent. Very interesting.
That's interesting, right? Even though there's probably a lot of stuff in between the Googles and the not successful startups, where anything can happen there. And I don't have many data points, but it should be interesting to take a look whether there are. I believe there are papers. There is some research about this specific topic around. So I will dig deeper. I will come back with some hard data.
We'll figure this out. Exactly.
Yeah, because otherwise it's just gut feeling.
It's a feeling. It's a gut feeling.
I don't know.
Yeah.
But you're right. The impression is that there is some bias towards repeat entrepreneurs.
Yeah.
And I mean, in Italy, it's a young market, so there are not many of them. So.
No, but what I thought it was a good example of serial founders that really are doing something extremely quick, and they've been doing they've been like scaling Serenis extremely quick, and that's for sure. That's a hard information. I mean, the seed stage is basically paid studies, right? If you're a repeat founders, you studied already. Repeat founder, you studied already, so someone paid for your studies. So you're skipping entirely a phase, not in terms of funding, but in terms of learning. Totally.
So I'm not surprised that the repeat founder is very fast to achieve specific type of KPIs.
Interesting.
The real question is what happens next when they enter into the unknown territory. Then the phase of scaling up, of growth, whatever they haven't seen, they haven't lived already. So that's not back to square zero, but it's new territory for them as well.
Yeah. Interesting. Very, very interesting thinking. All right, moving on to the next deal. Let's talk about A-Word, climate tech startup raising 2 million in a bridge round. So this is one of the biggest of last week. Some of the investors include Telefonica, CDP VC, YAG, and a few other investors. So A-Word basically is working in the space of essentially helping corporations to enter a culture of sustainability through different challenges and through like a platform that basically engages in different ways employees in general. And that's a way to actually sensitize like a certain population to everything that is like decarbonization and sustainability. The app has had like a huge endorsement with celebrities and with the UN. So that was also what has happened. So I think the execution here was definitely interesting in terms of marketing and visibility of the brand. I'm not sure. I don't know much honestly about the business model, but definitely it's worth mentioning that they've been placing their brand in very powerful positions.
Yeah, I agree with you. That's A-Word is one of those startups that they've got an interesting positioning. They're not mainstream in terms of you read it or hear about them, but I think they're doing things that's quite interesting. And I remember someone mentioning them as one of the Italian startups to watch recently on Citadel.
Okay.
Yes, so they're starting to, and they probably have a good timing in terms of what they're offering to the market.
Yeah. And great, also great investor over here, like basically Sella Bank, Digital Magics. So very interesting. Definitely something that.
In this case, the interesting actor here is Telefonica. Mm-hmm. That's the investment, the investor that you usually see here.
Yeah.
So this says something about what might be the next move by World. Both in terms of geographies that they want to address and in terms of distribution. Mm-hmm. Mm-hmm. There might be something there.
Interesting.
Very nice.
All right, moving on. Let's talk about WeShort, short movie streaming services raising 1 million from Minerva Pictures. So we don't see many deals regarding like movie and sort of attacks to the Netflix. Nothing much. But I thought it was very interesting because they're trying to target a specific niche of creators, which is like short movies, and we have a rather big production house backing the deal, so that's also like a great validation. And what I thought was particularly interesting was the subscription, because it's a subscription model, is a platform, but it is $2.99 a month. So that gets me thinking, because is it the time where we're seeing first example of micro subscription instead of platformization? I don't know if it's a word, but big subscription, $19 to $25. Is that thing exploding into specific contents that one can enjoy and kind of mix and match the way they want? Maybe that's one of the first signs of this kind of trend.
That's a fair question. I have no idea, but as you said, it's a nice, it's an instance of a new type of because I don't know many similar type of offerings. They propose you a short engagement, mm-hmm. because they talk about 10 new releases per week, mm-hmm. So no risk of binge watching. That's mm-hmm, for sure. Mm-hmm.
Good point.
And so limited time frame, limited type of expected consumption, or in terms of time that you might spend on the platform, and small ticket.
Yeah.
So that's as you said, I don't know, interesting space to explore.
Maybe the future of entertainment is a mosaic, like $2.99 for shorts, maybe $1 something for your newsletter, and then another $2 for a Patreon, and there you go. I get to my $20.99 a month. I mean, maybe that's another way of consuming content for the future.
Nice points. Basically, you're thinking about the personalization of my $20 per month into several service providers that all fit a very specific niche need that I have in terms of time, of allocation of my media consumption time, whatever that means. That's a very fair point.
Interesting. I would love to see that. I would definitely love to see that. Right, moving on, let's talk about the next Irreo, agri-tech startup raising $850K from Primo Space, Digital Magics, and Lazio Innova. That's super cool, because now space is agri-tech and agri-tech is space. That's super cool. So for people that don't know, Irreo basically essentially elaborates a ton of daily data from satellites and re-elaborate them, giving them to agricultural companies, farmers, to actually track a lot of metrics when it comes to humidity of the soil, evolution of the plants, etc., etc., etc. Everything without any sensor, but only through satellite imaging. So that's extremely cool. So Nick, give us some insights, some secret things.
Which I don't have as well, because Primo Space is a separate fund, and basically I know less about them than about other digital funds that do not live within the Primo Ventures ecosystem. So, but as you said, what I can tell is that this is probably one of the first investment in downstream startups from Primo, probably the second, I'd say. As you know, space is a very broad market, much broader than what it might seem at first sight. And that downstreams appear to be the obvious word, the obvious area for digital startups, and Earth observation is an obvious candidate for doing things with the data coming from satellites. We get some kind of solutions with that data. And Irreo, they developed this quite deep platform, so they can enable a lot of data just from satellite observation, and the nice touch of machine learning in order to understand and analyze what the images are telling us. As you said, agri-tech is an important market now, as energy and water are becoming scarce resources, or expensive resources at least. So this is, a very solution at a very clear problem, much clearer than now than a couple of years ago. So good timing for them. And again, we'll see how it scales. So 850,000 is a seed round, good size. So good luck to the team.
Yeah, no, totally. All right, let's jump to FoolFarm. FoolFarm is a venture studio in Italy, raising 3.5 million euro. That is interesting because the phenomenon of venture studios and venture builder has been a thing in the past 3 years, I would say. It's been growing. There are some solid companies that have been developed around the concept of venture studio. Every year there is someone new kind of trying to kind of push the boundaries on the concept. Some are surviving, some are not, but it's a model that is really appreciated. And in my experience, I think there is also like investors starting to appreciate the model of the venture studio. So as an asset class. In this case, we have FoolFarm. FoolFarm basically focalizes in deep tech, so in frontier technology startups. They've launched, I believe, like 4 startups for now, and they've been basically conducting a raise to a 5th one. And yeah, they also got this capital increase for the company itself, which is particularly interesting also.
Yep, I agree. So the startups, the venture studio wave, is reaching probably, I wouldn't say maturity, but it's enough momentum to be now something to account for. I have to say, originally it was not easy to for a traditional VC fund, I believe so. That's my point of view, but it's probably quite widespread. You're basically used to investing in company where the founding team are physical people owning the majority of the startup, working hard on the idea and so on and so forth. Traditional view of the founder entrepreneur. With venture studios, that's not always true. Actually, the reverse is more true. I mean, you have a venture studio that's basically owning the startup, and they are releasing equities to entrepreneurs in residence. So the cap table is upside down. And you start with looking at the beast that is not like the beast that you used to see.
Yeah.
So I think that there is venture studios have met some resistance in the market, but as you said, they're starting to showing at least the good ones the value that they are able to create. There is a research going on. I don't know whether you've seen it,
Okay.
About the ratios of startups leaving venture studio that get to seed and Series A with respect to the average basket of startups. I mean, there is maybe some bias there, but it's
of course,
because numbers are quite important.
Yeah.
And the other interesting bit is that the sequence of actions that the FoolFarm is doing, but others are doing as well. So they play, you raise capital on the venture studio, and then when you have enough startups, enough track record, you start raising a sidecar funds in order to be the seed investor that's up to that moment you raised from outside capital. So basically, it's a good starting point to build an ecosystem of startup building and then investing and then supporting and then growing and so on and so forth. So
interesting.
It's a very interesting play.
Yeah, definitely to keep an eye on.
Fast.
Cool.
And I love the vertical on AI and tech.
Yeah, I mean, it's not just any venture studio. It's pretty like a damn vertical on specific like deals, which is good. I believe it's definitely interesting.
Yeah.
So,
yeah, because
no, go ahead.
No, because I have to say that venture studios, maybe some of them tend to look at fast markets, so consumer markets, where they can quickly validate some aspects of the business model. But if you go after deep tech, that's not as fast. So you need to have some clear ideas at the very beginning, lead generation, validation, and so on and so forth. But what you want to do, what you're doing. So
okay,
it's a very nice play.
All right, let's end on a bittersweet note, I would say. Let's talk about this, Nick, and then you tell me what you think about.
Oh, come on.
Okay, so the news.
No way.
Yes, way. So for the people that didn't follow the news, essentially 9 months ago, Italian startup Brumbrum got acquired by Cazoo, and UK based, right? UK based, right?
UK based.
Exactly. And in basically, I don't know when that got released, but essentially like last week, basically they essentially, after rebranding and kind of eliminating Brumbrum as a brand, the company Cazoo decided to resell basically what formerly was known as Brumbrum back to Italian company Stellantis. And Stellantis immediately reinstated Brumbrum just to see exactly how they can sort of revive the asset in the Italian market. In the meantime, this is what's happening in Cazoo. So basically, it's a total collapse, and it's minus 96.99% since essentially, basically, well, year to date. Well, actually, all the this is the maximum range, where we start at about 11.30. Now we are at 0.34 cents.
0.34, so it's 30 times lower than the peak.
It's insane. It's insane. And what I was checking actually is when essentially the collapse started, and basically, I have it's
exactly 1 year ago.
Exactly 1 year ago. Correct.
The birthday.
Yeah.
The birthday of the ends.
So in a way, we kind of regained back one of the company, even if it's way smaller than it used to be. I think they had a lot of firing going on. There was a lot of layoffs, unfortunately. But I'm sure the guys at Stellantis have a plan for that. So probably they got it they're definitely with a good deal. And now they will try to revive that. So that's we'll see. We'll keep an eye on it. That's important to see what's going to happen.